Morning, guys. It's Wednesday, November 5th, 5:26 a.m. Central Time. Grain markets are mixed to higher this morning. December corn futures up 1/4 cent at 4.31 3/4. January soybeans up 7 1/4 at 11.28 3/4. December Chicago wheat down 3/4 cent at 5.49 1/2. December Kansas City wheat down 1 1/2 at 5.35. December spring wheat down 1 3/4 at 5.55 1/2. Mackenzie, we have not asked the people to hit the subscribe button in a while. If they haven't subscribed to the channel here on YouTube, what should they do?
Hit that subscribe button right away.
We hit 28,000 subscribers this week. And I think the last time we talked about this, we were at 25,000. So this thing is much bigger than I ever thought that it would be. And if you guys are listening on like Apple Podcasts, do us a favor and leave us a review. That would be very helpful. We love you guys to death. Let's start off with a potential farm aid package.
So once the government shutdown ends, the Trump administration plans to provide up to $12 billion in aid to farmers affected by Trump's trade policies. According to the USDA's Deputy Secretary, the final amount may be adjusted depending on how the market reacts to the recently negotiated trade truce with China. But he also stated that the trade framework does not replace the need for federal assistance. The proposed aid would follow a structure similar to the $28 billion market facilitation program from Trump's first term. In addition to trade-related challenges, farmers, of course, are also contending with the ongoing effects of inflation.
So I've heard different things on this. I have heard from very good sources that this could be more of an ECAP style payment where it's an across the board, every crop, probably per acre type payment. If it's a market facilitation program type payment, an MFP style payment, which is more focused on crops hurt by trade, then it's going to be a soybean, sorghum payment, things along those lines. I hope and would think more so that it would be an ECAP payment, but we don't know. So they're going to announce something the way that it looks after the government shutdown ends. We've gone through we've jumped through every hoop you can jump through about government payments and why they're good, why they're bad, why people like them, why people don't like them. We don't need to do that again. The government shutdown is supposed to end next week. Bettors on Polymarket estimate based on their bets that the shutdown will end on November 13th, which I believe is Thursday or Friday next week. And bettors on Kalshi, pretty similar. We've been shut down for 35 days. They believe that the shutdown will last 45 days in total. So it could be maybe not next week, but maybe the week after that you see some sort of announcement, because I think it's all teed up and ready to go. I think they've just got to wait for the government to get reopened. So hopefully the government reopens next week and we hear the news that I don't know that we've been necessarily, I guess, waiting for. I'd like clarity, whether or not you like the payments or not. I'd like clarity on what's going on.
ADM lowered its 2025 profit outlook on Tuesday, citing trade uncertainty, weak soybean crush margins, and lower ethanol margins. The company's CEO believes the main drivers of commodity prices moving forward will be clarity on the U.S.-China trade deal and biofuels policy. A lack of details regarding the trade deal with China has slowed farmer selling and disrupted normal market flows. Meanwhile, unclear biofuel policies are weighing on soybean oil demand and crush margins, though ADM expects regulations to fall in place once the government gets going again. ADM's third quarter operating profit fell 19% year over year to $845 million, with year-to-date earnings down 23%.
Juan Luciano is the CEO of ADM, and he said that there has not been a joint document highlighting the details on the agreement between the U.S. and China, and he would be correct. The United States government posted a fact sheet on their website regarding the recent trade agreement, and they mentioned all the soybean amounts and all that stuff. But China has not signed anything to this point. We would like to see China sign something and make this thing a little bit more concrete. Now, you look at the action in the soybean market. We were off yesterday. They came in, they bought the dip last night, and we're almost back to the highs from earlier this week. The market would suggest to me, market action, price action would suggest to me certainly that there is business going on behind closed doors. China's buying beans behind closed doors from the United States. You see it in spreads. You're seeing it in basis in some areas of the country. So I think that's what's going on. We can't know for certain because the government is shut down. I'd like to see, of course, the government reopen because I want to see export sales. I want to see, that sort of data release. CFTC data would be nice to see as well. If you're interested in the ADM stock price, and I'm really not, but it's been a little bit better this year. They're up 19% year to date, but still down 39% from their 2022 peak because they've had some issues that we don't need to talk about here. We've talked about in the past.
The US dollar rose to a 4-month high against the euro yesterday amid divisions within the Federal Reserve, raising uncertainty about another interest rate cut this year. Expectations for a December Fed rate cut have dropped to 65% from 94% a week ago. Overall market sentiment weakened, with stocks falling and government bonds seeing increased demand. Other safe haven currencies, including the yen and Swiss franc, also strengthened.
All right. So the US dollar is still generally weak year to date. We're down almost 8% year to date in the dollar index. The way that I view this as it relates to, say, the corn and soybean markets is like this. The dollar index, the one that everybody watches, this one is more of a sentiment thing than anything. If you're looking for the more fundamental driver of corn and soybean price action, it would be the relationship between the US dollar and the Brazilian real. And the dollar has been weak versus the Brazilian currency this year. It's off almost 13% year to date. And that is a positive for soybean prices. And this certainly plays in. It's part of the reason that US bean prices have been able to rally sharply. And more of it has to do with the trade stuff recently, but the market has acted a little bit better partially because of this. This is maybe like the real world chart of the dollar. This is actual government data, CPI purchasing power of U.S. consumer dollar and U.S. city average. So this is like an index of buying power. The U.S. dollar, based on government data, has lost 21% of its buying power since the start of 2020. And I think a lot of people would argue that it feels like we've probably lost more than that. It probably feels like we've lost like 30% since the pre-COVID days. But even the government data would tell you that purchasing power has fallen off a cliff and will probably continue to do so.
If you guys have not checked out our recent premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
I was busy yesterday, 2 premium videos. We did a corn, soybean, and wheat marketing review. I ran through every cash sale that I've advised for all 3 crops, multiple marketing years worth. I break down what I advise in terms of cash sales by crop year, and percentage. I tell you what I sold, when I sold it, what the price was. We benchmark everything versus futures contracts because, of course, your basis is different everywhere. If you're looking for a very simple approach to grain marketing, this is it. There is not a more transparent marketing program or advice type thing out there. I don't advise anything in terms of futures or options or fancy strategies. It's just, hey, we're selling this percentage right now, and then we'll move on to the next percentage. Pete Meyer was on yesterday. We talked about a lot of things, like what's the upside potential in the soybean market? What are Pete's thoughts on corn yield? The most interesting part of this was Pete's knowledge of the forthcoming USDA report. There's a crop production and WASDE report due out on November 14th. They're going to put a report out despite the fact that the government closed. And the way that the data is being compiled is extremely interesting. It's much different because of the shutdown than it has been in the past. There's a lot of things that are going to play into this, and I believe it's going to have an impact on some of the yield numbers in particular. Chris Barron was on earlier this week. Your farm insurance needs a review, not crop insurance. We're talking insurance on bin sites, on implements, on liability, all that stuff. Most farmers are undercovered and have a lot of gaps, and Chris discussed all of that. If you want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation. Nobody tries to sell you anything else. I don't want to talk to you ever. I will answer your questions if you text or email, but I don't even make my phone number available. As I've said in the past, I'd love to throw my phone in the river. We just want to send you our content. Super easy to sign up on your phone. It takes like 30 seconds. All the content is super easily accessible on your phone. Give that deal a shot this morning, guys.
U.S. farmer sentiment improved in October. Purdue University CME Group Ag Economy Barometer Index rose to 129, 3 points higher than September. The increase was fueled by an uptick in the index of current conditions, which climbed 8 points to 130. Meanwhile, 58% of respondents said they believe tariff policies will strengthen the U.S. agricultural economy, a 7% increase from September. However, 16% of respondents are unsure whether tariffs will be beneficial. That's double the share of respondents reported in the spring. Despite ongoing questions over trade policy, more than 70% of respondents said they believe the U.S. is headed in the right direction.
This is the most interesting ag barometer that I've seen in a while, and it's not because of the actual barometer reading. I have found that to be not useful to me, but some of the statistics that Mackenzie rattled off here, and they've got some good charts. Look at this one. Would you say things in the U.S. today are generally headed in the right direction or are on the wrong track? And 72% of respondents said we're going in the right direction. This to me says the U.S. farmer still supports Donald Trump, is what that tells me. Am I wrong?
No, I would agree. That's how I would read it also.
And the most interesting thing about this is, so 72% approve that, or say we're going in the right direction. This survey was taken October 13th through the 17th, before we knew anything about this US-China deal. So tack another 10% onto that 72%. Soybean prices are the best that they've been since July of 2024. So if you were one of these people looking at this thing and say Donald Trump killed the soybean market and he's killing the farmer and he's going to lose his support, no, he's not. Do you expect, you mentioned this stat as well, do you expect the increased use of tariffs by the United States to strengthen or weaken the U.S. ag economy in the long run? 58% say yes. So maybe that idea is dwindling a little bit, but it's still the majority. If USDA provides a market facilitation payment to compensate for weak commodity prices, what will be the principal use of this payment for your farm? They're going to pay down debt. So who's lobbying for this stuff? It's the banks, it's the input suppliers. It's not necessarily the farmers, as we've discussed in the past. What changes, if any, will your farm make in 2026 to respond to low corn prices? 30% said no change. And then you've got some, reduce seeding rates, adopt lower seed costs, reduce, fertility, that sort of thing. So I don't know if any of that is surprising, but I think the one that stuck out to me was like, they're still very much behind the Trump administration, even before the recent spike in soybean prices and the trade deal, truce, whatever you want to call it, with China.
Agriculture Secretary Brooke Rollins said earlier this week that she is not yet comfortable with reopening the border to Mexican feeder cattle imports. She acknowledged that progress is being made toward that goal, but did not provide a timeline for when it might occur. The border, of course, has been closed to Mexican cattle imports since May due to the ongoing outbreak of New World screwworm down in Mexico. Containment efforts by both the U.S. and Mexico have made significant progress in controlling the pest. Rollins emphasized that rising beef prices are not a factor in determining when or if the border will reopen.
Is that pretty much what she told us on Friday?
Yeah, that's basically what she said. Yeah. However, this week she did make the comment that President Trump is highly focused on reopening the border, which I think might have fueled some of the pessimism that caused the sharp sell-off that we saw in the futures yesterday.
Gotcha.
S&P Global has maintained its U.S. corn and soybean yield forecasts. The firm estimates this season's average corn yield at 185.5 bushels per acre. Corn production is projected to reach 16.8 billion bushels, up from the prior forecast of 16.7 billion. The firm also raised its outlook for this season's total corn acreage by roughly 1% to 90.59 million acres. The average soybean yield is estimated at 53 bushels per acre, while production was slightly reduced to 4.26 billion bushels.
I've told you guys in the past, I don't really do opinions on yield, but I'll tell you this, the market is not trading a 185 or a 186. If the market were trading a 185 or 186 national corn yield on 90 million harvested acres, corn would be sub $4 on the board. We'd probably be in the 370s, 380s. That's my guess. My opinion, not of the crop, but of the market's take on the crop. My opinion is that the market is trading something 183 or lower, and it could be as low as 180. I think the market's trading something lower than this. You can run through all the balance sheets and do those exercises. We've done it in the premium stuff, but I think that given the fact that you got spot futures at 432, it's not a market that's trading a 185 or a 186. And I understand that Stone was out with a similar number, 186 or 186 and change earlier in the week. I don't agree that that's what the market's trading. I don't think that when these estimates come out, they necessarily take that into consideration. I know the StoneX deal is a survey, S&P has a survey also. So that's my take on what the market seems to believe right now. What did cattle do yesterday?
Cattle sold off sharply. Live cattle were 380 to 502 lower. Feeders really took a beating with losses ranging from 725 down to 775. Box beef prices were mixed. Choice was down $1.67 at 377.58, while Select was up 132 at 361.25.
Stock market's lower this morning. The S&P is down 17 points. I read a headline that people in the equity markets are nervous about something called a hot commie summer because that dude in New York is going to get elected, and it's going to be like a big, I don't know. That's not me. That's what the headlines are saying. Treasuries are mixed this morning. Crude oil is up 13 cents, and the December WTI at 60.69. Gold's up $10. Have a great day, guys. We'll be back on Thursday.